Welcome back to another episode of me trading smart, managing risk while learning how to trade effectively. Is my camera good? Is that good? Need better lighting. All right. Well, anyways, today was a rather rough session. Once again, Friday was tough as well. Friday was NFP. I tried doing the volatility pinball drill. It was not the right day to do the volatility pinball drill. I did the volatility pinball drill again today, and there was no volatility to do the volatility pinball drill. So my approach to today was doing the drill from 7 o'clock to 9:30 or in the pre-market session, and then actually looking for a trade setup post 9:30. But because of the actions and decisions that I made in today's session, that made me feel away, and then I was very discouraged, and then I just walked away for the session, and conditions were not it. So let's get into it. Okay, starting on the 15-minute time frame, here's what I was thinking. All right, so I see that we have this original consolidation up here. We have all these relative equal lows here. We see protraction lower, drop down, initially aiming for the sell side liquidity first. So what does that tell me? We are on the sell side of the curve of a market maker buy model, right? And what really catches my eye is this little consolidation right here. This price leg right here, this manipulation leg lower, runs out these relative equal lows from yesterday's PM session. And notice how it accumulates under those lows, spends time underneath those lows. And then notice how price is reacting to this inefficiency right here. So all these are clues to me that the market is now switching from the sell side of the curve to the buy side of the curve, okay? We accumulate underneath these relative equal lows. And notice how price spends time inside of this inefficiency, which is not what you want to see. How you want to see price respect and inefficiency is like this up here. How we just have this boom, wick right into it, and then boom, displacement lower. But you're not seeing that right here. You're seeing the market spend a lot of time in here, which indicates that this inefficiency is probably not going to hold up. Price is probably going to roll right over it, and it's going to fail. And if you also look below the market price, you can see the market is putting in higher highs and higher lows. So what does that indicate? The market is in a buy program seeking buy side liquidity above old highs. Now, where could that be? Well, it could probably be these very, very smooth, very clean, literally equal highs on the 15-minute time frame. So this is what really caught my eye today. And seeing this protraction lower, originally taking the sell side liquidity below these lows, smart money reversal here. And now the market is pricing in higher highs and higher lows, spending time in this inefficiency that's going to fail. That was very clear and indicative that the market was going to reach the buy side liquidity above these relative equal highs. So that is what I was aiming for. Now I did catch a nice solid price run in the pre-market session. I was able to get in sync with this move, and I was going to aim for 20,163 flat, which the market delivered to after 9:30. And I would have hit that, right? Like on the dot. Notice how price came up to it just shy, barely missed this high. Barely missed this high, turned away, and then came back, stopped me out for break even. But I moved my target. Greed, guys. Greed. I'm dealing with it. I'm going through it, and I'm learning how to handle it. And you better believe that I'm going to learn how to handle it. Because if I don't, then I'm not going to be able to trade. So that's just something I have to get over, something that I have to conquer, which I will. You better believe that I will. And you better believe that you can do it too. Okay? You just got to journal the shit out of it. Know exactly what it feels like. Know exactly what the chart looks like when you feel that emotion, because it's going to happen again. I'm going to feel greed tomorrow, but I'm not going to let the greed win tomorrow. I'm not going to give energy to the greed. I'm going to think about what that did to me today, and that's going to prevent me from making the mistake. So if you want to prevent yourself from making emotional mistakes, you have to think about what that decision led to in the past, okay? Today I felt greed and I moved my target. What happened as a result of me moving my target? Price came back all the way back to my entry and stopped me out. Had I stuck with my original target, I would have had to take profit. I would have had, 40 handles carrying a trade over from the pre-market session through the 9:30 open, just following my model that I've developed. But I got greedy, moved my target, came back on me for break even. So literally every single time that I move my target, the market has come back and take my stop for break even. So I've developed this trade model. Let's see, in the pre-market session, right? So this is literally what I saw today, okay? We have an original, so I'm just identifying the market maker model in a 15-minute time frame. We have original consolidation. The market drops down. We have a smart money reversal, reaches higher time frame key liquidity and or inefficiency. So it's from 7 o'clock, I see price begin distributing higher. We have the smart money reversal confirmed. It's there in price action. You can see it in the overnight session. And now price is just distributing higher, working towards the buy side liquidity above those equal highs from the original consolidation, right? So I'm simply looking for the market to reprice to a short-term discount, drop into a higher time frame PD array, and get in sync with that move. And then on the 1 minute or the 15-second time frame, I'm looking for the same thing. I'm looking for a lower time frame market maker model that is aligned with the higher time frame market maker model. When I want to see price drop down into that higher time frame discount array, run some sell side liquidity, reprice to a short-term discount, then show me a smart money reversal during the macro. And I'll show you that literally happens today. Okay. Market maker model, drop down, smart money reversal. And also check this out. Whoa, sorry about that. But this is what made me had confidence in the market turning here. If we go to my new day opening gap, new week opening gap chart, look where the bodies close right here on this cluster of new day opening gaps, right? So they're unable to traverse this area price action, indicating what? This thing's going to go higher. So not only do we run the relative equal lows from Friday's PM session, accumulate longs, but we have failed to traverse these new day opening gaps, that cluster right there. And now price is beginning to distribute higher. Now I'm thinking we can reach these relative equal highs right here. Okay. So going back to my regular chart, I got long on this candle right here. So we can see that price drops down into, we have a very tiny inefficiency right here. But notice how the bodies are closing above it, right? So what does that indicate? Strength. For me to get into any trade, I need to see the bodies of candles on the 15-minute time frame indicate or support the market turning there. In this case, they do, right? Because we are wicking down into it. Wicks do the damage. Wicks color outside the lines. Wicks are allowed to do that. That is permissible. They give it a mohawk. But the bodies tell you what price is doing, and the bodies close above it. So we can see, we could even annotate this wick as well. That price drops down into the consequent encroachment of this discount wick right here, right? And it's also dropping back down into what? This inversion fair value gap as well, right? So we can annotate that as well. Respecting that. The bodies are respecting the upper quadrant of this inversion fair value gap as well. So there's another piece of confluence that I didn't even see in the moment. But this trade idea is framed basically off of this 15-minute buy side imbalance, sell side inefficiency. And notice how we run these relative equal lows right here, right? So the market is pricing to a short-term discount, running the relative equal lows inside of that higher time frame inefficiency. And that is where I look to get long during the macro. Key element of time. There you go. Okay. So if we drop down to the 15-second time frame, we can see that. Here we go. Where's our relative equal lows? I think it's what? This low and this low, maybe? Okay. So here we have original consolidation on the 15-second time frame. We drop down, sell side of the curve. Tap into that 15-minute buy side imbalance, sell side inefficiency. These are the wicks on the higher time frame, but on the lower time frame, we see coloring outside the lines. That is permissible as well. We see a smart money reversal during the macro, taking out this short-term low right here. So we're repricing to a short-term discount. Smart money reversal during the macro. I get long on the inversion fair value gap right here. And so today I was also doing ICT's volatility pinball drill, which is all these executions right here, which I'm not going to get into because I don't have time today. And these executions right here, which all gave me crucial, valuable lessons, which make me a better trader. So I highly recommend doing that drill. I have a video on it on my YouTube channel if you want to check that out. We have a smart money reversal during the macro. And I'm getting long on the inversion for value gap. Okay, now where I'm targeting. Where am I targeting? Well, I was targeting these relative equal highs, right? And we come just shy of them and we drop down. So what ICT teaches in his live stream is to take off before your objective delivers, right? So I was targeting 20,163 flat. That's what I was targeting. I was targeting a couple of handles before these relative equal highs just to be conservative, right? Just to make sure that I get my fill, make sure I'm able to distribute my long position at these highs and drop back down to the lower time frame. How did I suck through with that target? Look what price does. Boom. Right? So I would have booked that price. I would have got out and it would have been a nice trade. And I did not roll my stop to break even after this displacement right here because I knew the 930 open was coming up and I wanted to weather some of that volatility. And my stop was literally only 10 handles, which was absolutely nothing. So I was going to weather some of that volatility. I stop with underneath here. was holding for 20,163 flat. Now, obviously delivered. I just moved my target. I moved my target to consequent encroachment of the opening range gap, which is right here, which is the difference between yesterday's settlement price at 4:15 and today's open at 9:30. So the midpoint there, once I saw that we had a large opening range gap, I was like, oh my goodness, you know what I can do? I can target the midpoint of the opening range gap. Never got there. At least without stopping me out for break even. We did get there, but we had this deeper retracement, right? Stopped me out. Came back, took the stop for break even, and then delivered. So the market conditions for today were very high resistance to liquidity, and it just had a very difficult time running for liquidity. High resistance liquidity conditions. Market is having resistance running to the obvious liquidity. And it is what it is, you know? Not every day is going to be a good day. Today's a Monday with no news driver, so that says a lot in itself, right? It's going to be a pretty slow day. Given the fact that we also have CPI and PPI later this week, and it's very obvious that today is going to be lackluster, and it was. But I mean, it was literally just greed. So that's what I want to cover today, that crucial mistake. And I hope that y'all see this trade and prevent yourself from making the same mistake. So as soon as I see large range candles move in my favor, I'm immediately thinking of a further objective. I'm immediately thinking, where can I target beyond what I was originally targeting? So that is just something that I have to get over. And I know exactly what I'm thinking every time that I have that thought of greed. So next time it appears, you better believe that I'm shooting it down and I'm saying, no, no, you're not winning this time. I'm winning. I win this time, right? Next time it comes up, boom, I'm not letting it win. I win next time. That's how it goes, right? So if you want to overcome a bad habit, which this is definitely a bad habit, I literally do this all the time. And every time that I do, the market comes back and stops me out for break even. Every time that I do this, the market comes back and stops me for break even. So obviously it is a bad habit and I have to fix that. How am I going to fix that? Well, number one, I know exactly what the market looks like when this bad habit appears. As soon as I start seeing large range candles move in my favor, that is when I have the thought pattern that leads me to feel greed. So you have to know the situation, which is basically the trigger, like what causes that bad habit. So the situation for me is I'm in a trade and I see large range candles moving in my favor. And then you have a thought pattern that kind of invokes that emotion. In this case, I start thinking, fuck it. Let's go for a further objective. Like literally, that's my thought pattern. And then what happens as a result of that is I feel the greed, and then the greed makes me move my target to a farther objective. So it's like a situation, a specific thought pattern, which makes you feel the emotion, and then it leads to the behavior. So it's that's kind of how the dominoes fall in that order. So if you understand those, you can prevent yourself from making this mistake. Once you recognize, you can literally stop it at this situation. Like tomorrow, I'm going to go in, I'm going to put a winning trade on, and I'm going to see large range candles move in my favor and think, I am not, absolutely not moving my target this time. And I'm sticking with a low threshold objective. Okay. So that's how I'm going to defeat that tomorrow. All right. See ya.